Hello guys, welcome to the trading Parrot. We seem to have completed the ABC pattern on the 4-hour time frame. We managed to get to our target of 32 and we took out the CME gap that we have immediately above the price. So what's next? We need at the moment to pay attention to what the RSI is doing on the 4-hour. We are hitting resistance. There is a likelihood in here that we could see further rejection. We're going to talk about those potential lower levels, and if we manage to close above this trend line, we are also going to talk about a potential reversal. What sort of patterns we need to be looking to look for strength? Where should we be looking for support? We are seeing some mild selling from long-term holders and big whales. I want to give you a quick update on that. I'll cover the weekly because now we are below the bull market support band and there's a few patterns that are currently in the process of being confirmed. I'll give you an update on dollar and gold. Some of these patterns are playing out by the book. I'll give you an update on the hash ribbons capitulation and what I'm expecting for the rest of October. Of course, we will cover all the liquidity pools, fair value gaps, and whether we have enough support in here based on the order book to potentially form a double bottom. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. Yesterday, once again, we got really close to 300 likes. I would really appreciate if we can get above that mark once again. Let's get into the content. I want to get started with the 4-hour time frame. There's a bunch of things that we got fully right and some things I missed yesterday. We spent 11 candles holding 62k in here. The same amount of candles on the left hand side of the pattern were holding the price as resistance until we broke above it and we head up to 64.5. So starting with what we got right, the analysis of liquidation pools. We talk about this price ranging around roughly 62k, building stop losses both on the lower and the top end, and we say that the amount of shorts that are being trapped in here were not as many as we can see on the lower end when it comes to the long strap. And we say that there was a low-hanging fruit to hit these levels in here. We said as well that it wasn't very clear if the price was going to go first for the CME gap formed in the 1-hour chart, which was located at 62.6. The part that I got wrong yesterday is when I say that we're going to have to wait a bit longer for the CME gap to get filled. Wrong. And the reason is because when I was looking at the price action on the 1-hour time frame, I noticed that we made a move up, but we barely made it to 62.4. The part that I missed is that the price on CME is 200 more typically compared to the price on spot or futures on exchanges. So if you notice this move up on the 1-hour on CME gap, it went to 62.6 precisely and it managed to close the gap. So technically speaking, we first closed the gap on CME, and once the gap was closed, then we dump to hit the stop losses that we were talking before. And as you can see, the price didn't stop right there, but it actually decided to continue going lower, a double bottom formation in here, but is again repeating the same pattern, trapping a lot more longs in here rather than shorts. And that is not a great thing. I would like to see the funding rates going into negative. That will mean that the shorts are overexposed, which could potentially give us a little bit more reassurance that we are about to find some sort of local bottom. What we got right was the forecast of the target of the dump. We took this level on the RSI, we place it right here, we target RSI 32, and you can see that we hit precisely RSI 32 in the price action. That is even more evident with this week in here. There is just 1 week that pinches the RSI 32, so we can consider that completed. And what I will focus now is on trying to find a reversal and to assess if we are going to continue going lower. And for that, what we're going to have to do is use this line as a resistance, connecting these two dots and appreciating that right now the RSI is hitting the resistance. The price action is entering into this fair value gap. If the price was just to take that liquidity and see a rejection where we had before support, which is pretty much around the 62k, slightly below it, if that continues to be resistance, we should be prepared for a potential rejection. If we were to go to a very discount price, notice that we have in the lower end here the low band coming from percentile nearest rank, our statistics of choice. If we go to the indicator and we highlight it using the show low band price, then we're going to see this green band appearing at the top, telling us that's pretty much located at 58.7. If we focus on the price action here, we can see that we have two strong order blocks. First, this one at 59.5, and second, this one at 57.8. The 57 area is the one that has the most liquidation levels. Let's go back into the swing version of the chart, and that is very clear that from 57.6 to 56.7 we got this big chunk, and that will fulfill the target of this ABC correction. We talk about a mini ABC correction, which was this drop in here, A, B, and C. But you know, in trading there are patterns within patterns, so that one we could consider it as an ABC correction within the 1 hour time frame, whereas this one in here is an ABC correction of the 4 hour. Of course, if we put a high, then we invalidate that pattern, and then we could start talking about a double bottom formation. It's a little bit too early to claim that victory, but obviously putting a low in here invalidates that potential reversal pattern. Let's look at the daily time frame, because things are starting to look a little bit confusing when it comes to the structure of the price. You can see that we have this low, higher high, higher low, higher high, and higher low. Up until this point, the structure is not damaged, and in here is where things start becoming a little bit in the gray area. Number one, because we couldn't manage to put a higher high towards the 67, and number two, because we still haven't put a lower low relative to 60.5. We are right there at the same price. So we could argue that from a bullish structure, we are entering into a ranging structure unless we put a new lower low or a new higher high. Either of them are going to clarify whether we stay or we have completed the bullish structure. From the point of view of the RSI on the daily, we can see that we are paying a visit to RSI 42, which has been the support since early August. When we were visiting 49, we started building this trend line, so not everything is lost on the daily. If we were to put a new lower low on the price, probably we will break this structure, penetrating this trend line and officially damaging fully the daily uptrend. On the Big Well Explorer, there has been some very mild amount of deposits. And if we show the source of this, you're gonna see that the biggest deposits versus withdrawals occur when we were highlighting these areas as distribution areas. This one in here, I intentionally pick a different color because we are seeing a completely different approach when it comes to the behavior of big whales. There is a preference around this area for doing more withdrawals, which is actually bullish. And what we are seeing today is a small spike in here in terms of deposits, and you can see that is having a very small effect when it comes to the actual Big Well Explorer indicator. It just went sideways. Whereas if we focus on the long-term holders, you can see that there was also a small move in here. If you focus on the blue line, you can tell that there are 2 days where they are in average selling. How much is this selling? Well, it's not that much. It's not reversing all that they have bought. This has made a move from 14.9 into 16.1, we could say. And from that 16.1, they sold 200. They have sold less than 20 to 15% of all they have bought in here. Of course, it's not something great either, and we need to continue monitoring how these things progress, because long-term holders and big wells deposits and withdrawals are definitely a must to understand if we could be entering some sort of distribution. And if you ask me, I think we haven't entered distribution yet. On the weekly, there are some scary elements going on at the moment with the price action. After we have the white 3 soldiers on the weekly, we managed to get above the bull market support band, but we are currently forming this ugly in progress candle that I've been observing since Monday from the time it was still in the green. I was telling you already it's not looking great, and now we are slightly below the bull market support band. This is still not bearish enough in my opinion, although this is a red engulfing candle, but in terms of Fibonacci, we haven't even made it to the golden pocket. The golden pocket as a reversal will be something bullish, so if we held here maximum with a closing candle above 58k, that's still something that can be considered as a healthy move because it's not undoing everything that these white soldiers did before. If we close on this week or on the next week below that 58k with an actual weekly candle close below that, then we start saying that the damage is a little bit more difficult to repair. The RSI still show that this low hasn't broken the previous low, so this is still just a retest, whereas the stochastic RSI is not agreeing with that, it's already forming a bearish cross, which hopefully by the end of this week on Sunday we can undo to maintain the speed to the upside. But if this was to close like this, it's probably gonna slow down the continuation to the upside. We're back in the fear. On the fear and greed index, we barely managed to spend a few weeks between the neutral and the greed. So let's talk about recovery as well. I'm gonna go back into the 4-hour time frame. We already mentioned that we are below this resistance. I'm closely monitoring how we close this 4-hour candle in here. That is extremely important to understand if the price is gaining any strength to maintain a momentum to the upside. If you look at the price action, we have undone everything that we did in here, which is something against us. But in our favor, we are still holding the CPR monthly levels. CPR model says something that no one wants to hear, which is in the month of September, we couldn't touch the first resistance, which is this green line in here. The model says that if you fail to do that during a month, on the next month, it's quite likely that you visit the first level of support. I told you no one wants to hear that, but the model states that the most likely scenario is that you're going to 55k. Since this move up in here is starting to look more likely to have been just a dead cat bounce, that 55k is something that now we need to start admitting is possible. And yeah guys, a few days ago I mentioned that we were about to have a capitulation signal from the hash ribbons indicator that tracks the hash rate. Yesterday I got a few emails confirming that the hash rate has been coming down in chunks of 10% every day, and now what we are gonna do in the next upcoming days is to monitor how the hash rate moving averages that are shown in here are behaving. What we are looking for is for this maze to close the mouth like in here, and that could print a buy signal. At these times in the cycle relative to halving events, we tend to have a capitulation event from hash ribbons that typically happens between September and November, and in the previous performance I have shown you in the last videos this week that typically we see the price pushing higher, but eventually when you get the buy signal you see some sort of move down of 15%, and that can happen anytime while the MAs are still inverted, showing this red color in here, which is precisely where we are. My speculation based on past performance was to show you that in 2016 and in 2020 what we did when we started having the capitulation event was price going higher and then having this 15% down. I drew this just to keep track of what happened in previous cycles, but you know, past performance is just an indication, it's not a guarantee. In terms of fair value gaps, we left untouched the 64 to 65, the same thing with the CME gap that we have never closed at the top. From 65k to 66k, it's still open there. You can consider this one already as closed, and unfortunately we have as well one in here from 54 to 54.5 that is currently haunting us and in confluence with the CPR support at 55k. Dollar index has managed to break inside this pattern. This is a candle in formation, but even the previous week was already inside the pattern. We were expecting to see a rejection in here, but we were wrong. That didn't happen. Gold continues to follow the trajectory of our forecast, which is to top out somewhere between 27 and 28k around this timing, which is the 7th of October. That's what I was speculating roughly a month ago. Just based on past performance, performance. And if we were to actually see gold topping out, moving towards 2200, we should expect Bitcoin to eventually do what it did in the previous cycle when gold was also topping out in here, which is to have the final leg up of the bull rally. Let's look at the order book, something very interesting. We are at the same price in here, 60.6k, which is the price we had on the 2nd of October at the time where 85 million in bid liquidity entered to push the price up to almost 64k. That amount of liquidity in buying pressure was quite significant, and we have to go 1 year back in time to find anything similar. In fact, in the beginning of September, what made a big move up was only 67 million, and we can only find 100 million when we go back to January. So the main question is, if they protected the price at 60k with 85 million, are we seeing anything similar now that we are at the same price? Yes and no. Yes, because if we take all the support that we have currently in here, started with 29 million, 29 again, and 26 again, if we put all that together, we get roughly 75 million of support spread across 2k in price. That is not bad, and I would have preferred not to see that support there today, to see just chunks of 15 and 19 million, because that will make it a lot easier to speculate that down we are gonna continue going. But seeing this 75 million quite spread away in 2000 range makes me think, are they still protecting the price or not? It's a bit ambiguous. On the top end, we continue to have very concentrated levels of resistance. At 65k we have 42 million, and at 70k we have 52 million. Right above the price we have 28 million, 16 million, 22 million. So if we just compare those 2k below and 2k above, I will say that the immediate 2k below at the moment has more bid liquidity compared to the ask liquidity 2k above. But if we get to 65k and 70k, those levels are definitely very heavy in selling pressure. Still, today for the first time we can say that the blue whales are selling, the brown ones are just going sideways for the first time. They've been selling strongly before, and all the other pocket sizers are not doing anything significant apart from selling. In the order book, nothing has changed dramatically except for some mild support at 60k at the moment. It's a psychological level, so some people are gonna defend it. Below it we have 58.5 and 58.1. And if you watch my video from yesterday, there's a good summary of what's going on in here and why these whales are buying these levels as well. Go and have a look if you want the full detail. On high block capital, in the 1 month chart, we can see 57k is the most significant level. On the 6 month, we have 50k, the most significant one. And in the past year, definitely the top end is what wins. The delta now is putting the shorts in risk. We can see all the levels of liquidation at the top end, and many people appreciated the video from yesterday where I explained this advanced alpha. My intention of showing you this is for you to understand a bit more of advanced concepts when it comes to trading, not to do a forecast. I know some people got disappointed that after I explained all this indicator, I didn't necessarily tell you buy or sell. And the main reason for that is because although I find extremely useful these indicators, at the moment, there is not necessarily any reading that there's an obvious action that you need to take. We're going to continue looking for areas of interest. For example, if we see that the ask goes back into this trend line at roughly minus 13, I will have to let you know, because that could mean that we're getting very close to another top. And there's high likelihood that we're going to be selling. When it comes to massive level of liquidations, 57 is the most significant, and we have a big chunk of shorts very exposed here. If we were to complete this as a double bottom formation, and from here we managed to get back into the neck of 64.4, definitely we are going to start talking about potential targets towards 67k. These liquidation levels in here are definitely going to play a role into helping us achieving that, but for that first we need to wait until we get to 64.4. Being at this point makes it too tempting for the market maker to consider going to that 57K too. So there's no point of convincing you that we're gonna get to 67 when actually this level in here is still so attractive. I didn't share this on social media, but yesterday I decided to short Tron. And the reason, just to give you an example, is that it hit the area in here very close to the highest ask liquidity that typically signifies a top for the asset. At the same time, the amount of longs that are exposed with high number of liquidation levels reach 70 million. It's not the maximum level that we have ever had, but that together with the open interest having had a big spike from 60 million to 80 million in just a couple of days, and seeing those liquidation levels right below the price, I took the short from roughly 0.16, targeting the area of liquidation levels in here. Another short that could be also interesting to take is this one with SUI that at the moment had a rejection at the same level that it did in the 26th of March. Be careful with these shorts because alts have been doing quite decent, but on the daily time frame, SUI is breaking down in here, and I wouldn't be surprised if it made a trip to 1.4 or 1.2. It's important to monitor that we don't enter when there is too many shorts already. At the moment, we are kind of passing the halfway through level in here between longs and shorts. It would have been definitely safer to enter the short when you were in there. That gives you better risk to reward. At this point in time, it's still a mixed bag, but that is the moment where we have managed, unfortunately, to confirm the breakdown of SUI. And the two recent signals from the Hive, one on the 1 hour and on the 4 hour, have managed to complete the target. You can see that the 4 hour print in here pretty much when we were at 63.5, targeting 61.3, that is completed, and the 1 hour signal that we had on the 7th of October, that completed just in a few hours. Guys, if you have a look in the description, you're gonna find all my favorite products in the crypto space. If you're looking for a hardware wallet, make sure that you have a look at Tangent. You get 10% of discount and you also support the channel. And if you're looking for exchanges, we have OKX, Bybit and Binance. Later today, I'm going to add an option that is KYC friendly. Make sure you watch the video tomorrow. I'm still negotiating the best offers that I can offer to my audience with high quality exchanges as well that I actually use. See you on the next one.